At 3:41 p.m. on a Wednesday, inside the transaction control room of a major international bank, a notification quietly appeared on a computer screen. It looked routine. Just another corporate transfer waiting for approval. But the number attached to it made one analyst glance twice. $800 million. $800 million. In the world of high finance, massive numbers move around every day. Hedge funds shift billions between markets. Corporations wire huge payments for acquisitions and investments. Banks process so many transactions that most of them pass through the system without anyone paying much attention. But what happened next would later become one of the most uncomfortable case studies in modern banking. The transfer was approved. Once, then again. 2 clicks, 2 digital confirmations. And just like that, $800 million moved. No alarms. No flashing fraud alerts. No phone calls from compliance. On paper, everything looked clean. The payment had documentation. It had authorization. It had digital records showing it had been approved exactly the way the system required. But weeks later, when investigators started digging into those approvals, they noticed something strange. Both clicks came from the same terminal. The same employee. The same login. At first glance, it looked like nothing more than a technical quirk. Systems glitch sometimes. Logs can be confusing. But when analysts pulled the full transaction history, the pattern became harder to ignore. That wasn't the only transfer with 2 approvals from the same person. There were others, and when they added them together, the total amount of money involved began climbing fast. 50 million, 100 million, 200 million. By the time investigators finished tracing the transactions, one thing was clear. Nearly $800 million had quietly moved through the system. Not through hacking. Not through some wild pump-and-dump scheme. Not through a dramatic cyber attack. But through the bank's own infrastructure. Approved by someone sitting quietly inside the system. Someone who understood exactly how money moved through the hidden machinery of global finance. Because when you operate inside the financial system long enough, you eventually start noticing the cracks. And sometimes those cracks are big enough for hundreds of millions of dollars to slip through. But before anyone understood how the money vanished, they had to understand the person who made it happen. And that person was someone almost nobody inside the bank ever paid attention to. His name was Nathan Caldwell. Nathan didn't work on the trading floor where markets moved by the second, and traders chased profits like adrenaline addicts. He worked somewhere much quieter. The Settlement Operations Division. That's the part of a bank responsible for moving money once deals are completed. When hedge funds execute trades. When corporations wire payments. When institutions move funds between banks. Settlement teams make sure the money actually moves. It's not glamorous work, but it sits right at the center of the financial bloodstream. Every day, Nathan monitored massive corporate transfers flowing through the bank systems. Some were small. Others were enormous. Hundreds of millions moving between institutions in seconds. After more than 11 years working in settlement operations, Nathan had developed a deep understanding of something most people never see. The hidden infrastructure behind modern banking. Because the truth is, the financial system isn't one perfectly engineered machine. It's a collection of systems layered on top of each other. Old platforms built decades ago. New software designed to interact with them. Databases communicating across networks that were never originally designed to work together. And sometimes those systems don't line up perfectly, which creates tiny blind spots. Most employees never notice them. But Nathan did. He noticed something unusual during a routine transaction review. Large corporate transfers required 2 approvals before being finalized. That was standard across most banks. One person initiates the payment. Another person confirms it. The idea is simple. No single employee should be able to move massive amounts of money alone. But when Nathan examined the system logs more closely, he spotted something interesting. The software recorded 2 approvals, but under certain conditions. It didn't actually verify whether they came from 2 different people. It depended on something called an override permission. Senior operators sometimes had the ability to approve both steps if a second manager wasn't available. The feature existed to prevent delays in high-value transactions. Because in global finance, speed matters. Deals move quickly. Markets shift constantly. Banks can't afford to slow everything down waiting for extra approvals. So the system allowed certain supervisors to finalize both steps themselves. Technically, it wasn't supposed to happen often. But the capability existed. And once Nathan saw it, he realized something dangerous. The system assumed 2 approvals meant 2 people. But it never truly verified that assumption, which meant a single employee with the right access could approve both stages of a transaction. 2 clicks. 2 confirmations. Transfer complete. At first, Nathan simply filed the discovery away as an interesting technical detail. But over time, that small detail started to look more like an opportunity. Because if one person could approve both clicks, one person could move enormous amounts of money. But moving money was only part of the equation. The real challenge was making sure no one noticed. And that's where the plan began to take shape. Nathan didn't start by moving hundreds of millions. Financial crimes rarely begin that way. They begin with tests. Small experiments to see how the system reacts. The first transaction Nathan manipulated was just under $600,000. A routine settlement adjustment between corporate accounts. The kind of transfer that happens thousands of times every day. He initiated the payment. Approved it once, then approved it again using his override access. 2 clicks. The funds moved. Nothing happened. No alerts. No compliance flags. Just a confirmation message saying the transfer had cleared. Nathan waited. Hours passed. Then days. Still nothing. That's when he realized something critical. The system wasn't closely monitoring individual transactions. It was watching for patterns over time. If an account suddenly started behaving strangely, automated monitoring tools would flag it. But one routine-looking payment, that blended into the noise. Encouraged, Nathan took the next step. He began building what investigators would later call a ghost network. The companies involved weren't technically fake. Each one was legally registered. They had corporate documents, tax numbers, business addresses, consulting firms, advisory services, investment holding companies. On paper, everything looked legitimate. But behind the scenes, those businesses existed for one purpose: to move money. Nathan opened accounts for them at different banks in multiple countries. Each company handled what looked like ordinary financial activity. Invoices, consulting agreements, service payments, the kind of paperwork auditors see every day. Then Nathan began routing money through them. Here's how the system worked. Large corporate transfers often passed briefly through internal clearing accounts before reaching their final destination. That pause gave Nathan an opportunity. Instead of allowing the payment to move exactly where it was intended, he slightly adjusted the path. The funds entered a temporary internal account. Then Nathan initiated a second transfer. 2 approvals. 2 clicks. The money landed in one of the consulting firms he controlled. From there, it was quickly distributed again. Some moved into international bank accounts. Some went into investment funds. Some was converted into digital assets. Each step added another layer of separation. To anyone reviewing the records later, the transactions looked ordinary. Consulting payments, professional service fees, corporate transfers, maybe a little shady paperwork, but nothing unusual enough to trigger alarms. And because millions of those transactions happen every single day, the fraud blended perfectly into the background. For nearly 10 months, Nathan quietly moved money through the system. 10 million, 50 million, 100 million. Each transfer looked like legitimate business activity. Until eventually, the total crossed a number no one expected. $800 million. And even then, the system remained silent. But what Nathan didn't realize was that a small detail in the logs had started attracting attention. And once someone noticed that detail, the entire scheme began to unravel. The first person to spot the anomaly wasn't a federal investigator. It was a compliance analyst named Lauren Hayes. Lauren spent most of her days reviewing transaction reports, looking for patterns, checking flagged activity. Most of the time, it was routine work. But one afternoon, she noticed something strange in the approval logs for a large transfer. 2 confirmations, same terminal, same employee ID. That shouldn't happen. At first, she assumed it was a software glitch. But curiosity pushed her to check older records, then another transaction, then another. Soon the pattern became impossible to ignore. Massive transfers, dual approvals, same employee. Nathan Caldwell. Lauren began calculating the totals. 20 million, 50 million, 200 million. Her heart started pounding as the number climbed. By the time she finished adding the transactions together, she realized something that made her stomach drop. $800 million. $800 million, all approved the same way, 2 clicks, 1 operator. Lauren escalated the issue to the bank's internal investigation team. Within days, forensic analysts began mapping the full transaction network. What they found looked like a web. Dozens of companies across multiple countries, accounts feeding into other accounts, money bouncing between institutions in a complex chain of transfers, classic financial layering. The kind often used in money laundering operations. But the shocking part wasn't the complexity. It was the simplicity of how it started. 2 approvals, 1 employee, 2 clicks. By the time law enforcement became involved, much of the money had already moved through the global financial system. Some funds were frozen, some recovered. But large portions had already disappeared into markets. Investment portfolios, private funds, digital assets. Nathan hadn't hacked the system. He hadn't broken security protocols. He had simply used the infrastructure exactly the way it was designed. And that realization left investigators with an uncomfortable conclusion. The fraud didn't happen because the system failed. It happened because someone understood the system perfectly. When people imagine financial crime, they often picture dramatic schemes, Ponzi operations, pump-and-dump stock fraud, market manipulation. But many of the largest financial crimes in history happen quietly, hidden inside ordinary business activity. Because the modern financial system processes trillions of dollars every day. Banks rely on automation to monitor those transactions. Algorithms scan for obvious red flags, suspicious countries, unusual deposits, strange account behavior. But when transactions look ordinary, the system assumes everything is legitimate. And that's the loophole Nathan exploited. A simple assumption. 2 approvals meant 2 different people. But no one ever verified that assumption. That small oversight allowed 1 employee to quietly move $800 million through the global financial network. No alarms, no headlines, just 2 quiet clicks. And maybe that's the most unsettling lesson from this story. Not the money, not the fraud, but the realization that the biggest vulnerabilities in finance aren't always complex. Sometimes they're simple, hidden inside everyday systems that everyone trusts. Because in modern finance, the most dangerous schemes rarely look illegal. They look like ordinary business. And somewhere inside the endless stream of transactions moving through banks right now, there may be another pair of clicks waiting to happen. And by the time someone notices, the money may already be gone,